Welcome back to XRP On Moon, the place where we don't just follow the headlines. We break them down, decode them, and reveal what they really mean for XRP holders around the world. Today's topic might sound simple on the surface, but don't be fooled. Because what just happened with credit cards could quietly become one of the biggest shifts in XRP's journey toward global adoption. And if you're holding XRP right now, or even thinking about it, you'll want to pay very close attention, because this isn't just another update. This could be a turning point. For years, credit cards have dominated the global payment ecosystem. Whether it's Visa, MasterCard, or other major networks, these systems have been the backbone of consumer transactions worldwide. But behind the scenes, these networks have always struggled with one major problem: settlement speed and cost. When you swipe your card, the transaction might feel instant, but in reality, the settlement process can take days. Banks, intermediaries, and clearing systems all play a role, creating friction, delays, and billions in fees every single year. Now, here's where things start to get interesting. The financial world is beginning to shift away from these outdated systems, and institutions are actively searching for faster, cheaper, and more efficient alternatives. This is exactly where XRP enters the conversation, not as a replacement for credit cards themselves, but as the underlying technology that could completely transform how these transactions are settled behind the scenes. Imagine a world where every credit card payment settles instantly, not in days, not in hours, but in seconds. No hidden delays, no massive fees, no complicated clearing systems. That's the kind of efficiency XRP was designed for. And now, we're starting to see signs that this vision is no longer theoretical. It's becoming a real possibility. What's driving this change? It's the increasing pressure on traditional financial institutions to modernize. With the rise of blockchain technology and digital assets, banks and payment providers can no longer ignore the benefits of real-time settlement. They're being forced to evolve or risk becoming obsolete. And in this race to innovate, XRP stands out because it was built specifically for cross-border payments and liquidity management. But here's the twist that most people are missing. This isn't about replacing your credit card. You'll still tap, swipe, or click just like you always have. The difference happens in the background, where XRP could be used as a bridge asset, moving value between banks instantly, eliminating the need for pre-funded accounts, and drastically reducing costs. Think about the scale of this. Credit card networks process trillions of dollars every year. If even a small percentage of that volume begins to rely on XRP for settlement, the demand for XRP could increase significantly. And we're not talking about retail speculation here. We're talking about institutional-level usage, the kind that can fundamentally change how value flows across the global financial system. And it's not just theory anymore. Over the past few years, we've seen growing interest from banks, fintech companies, and payment providers in blockchain-based solutions. They're testing, experimenting, and in some cases, already implementing technologies that align closely with what XRP offers. The narrative is shifting from if to when. Now let's pause for a second and really think about what this means. For decades, the financial system has been built on layers of trust, intermediaries, and delays. Every transaction involves multiple parties, each taking a cut, each adding friction. XRP challenges that entire model by offering a way to move value directly, instantly, and at a fraction of the cost. So when we say credit cards just changed the XRP game forever, what we're really talking about is a shift in the underlying infrastructure, a quiet transformation that most people won't notice, but one that could have massive implications for those paying attention early. And here's the key point. Markets don't wait for full adoption to react. They move based on expectations, narratives, and momentum. If investors begin to believe that XRP is positioning itself as a critical layer in the future of payments, especially in something as massive as the credit card ecosystem, that perception alone can drive significant interest. But of course, this isn't a guaranteed outcome. There are still challenges, regulatory questions, and competition from other technologies. Nothing in this space moves in a straight line. However, the direction of travel is becoming clearer. Faster payments, lower costs, and more efficient systems. And XRP sits right at the center of that conversation. Now, to really understand why this shift could be so powerful, we need to go deeper into the mechanics of how credit card systems actually work today. Because once you see the inefficiencies clearly, you'll start to understand why something like XRP isn't just an option. It's a solution waiting to be plugged in. When you make a payment using a credit card, it might feel instant, but behind the scenes, it's anything but simple. The transaction goes through multiple layers: the merchant, the acquiring bank, the card network, the issuing bank. And then finally, the settlement process begins. This settlement doesn't happen immediately. In many cases, it takes anywhere from 1 to 3 business days, sometimes even longer depending on the region and the banks involved. During this time, funds are essentially in limbo, moving through a system that was designed decades ago. Now here's the critical issue. This delay creates cost, and that cost is passed on to everyone. Merchants pay processing fees, banks maintain massive liquidity reserves to handle these delays, and international transactions become even more expensive due to currency conversions and intermediary banks. This entire system works, yes, but it's far from efficient. This is where XRP's real value proposition begins to stand out. XRP isn't trying to replace the front-end experience, the swipe, the tap, the convenience. Instead, it targets the back end, the settlement layer. With XRP, transactions can be settled in seconds, not days. Liquidity can be sourced on demand, meaning banks no longer need to lock up huge amounts of capital in pre-funded accounts around the world. Let's make this simple. Right now, if a bank wants to process international payments, it needs to hold money in different currencies across various countries. This is known as nostro accounts, and it ties up billions of dollars globally. XRP changes that by acting as a bridge currency. Instead of pre-funding accounts, a bank can convert its local currency into XRP, send it across the network almost instantly, and convert it into the destination currency on the other side. Now imagine this applied to credit card networks. When you use your card internationally, there's a currency conversion happening somewhere in the process, often involving multiple intermediaries. With XRP integrated into that system, this entire process could become faster, cheaper, and more streamlined. The transaction could settle in near real time with minimal fees and no need for complex intermediary chains. And here's where things get even more interesting. Major payment networks are already exploring blockchain technology. They understand that the current system, while functional, is not future-proof. As consumer expectations shift toward instant everything, instant payments, instant transfers, instant access, the pressure to upgrade infrastructure becomes unavoidable. But upgrading a global financial system isn't easy. It requires a solution that is not only fast and efficient, but also scalable, reliable, and compatible with existing systems. This is one of the reasons XRP has remained in the conversation for so long. It was designed with these exact requirements in mind: high throughput, low cost, and the ability to handle large volumes of transactions without compromising speed. Now, let's talk about the potential ripple effect. And no, that's not just a coincidence of wording. If even one major credit card network begins to integrate a system that leverages XRP for settlement, it could trigger a chain reaction across the industry. Competitors would be forced to respond, either by adopting similar technology or risk falling behind. And this is how disruption often happens. Not all at once, but gradually, and then suddenly. At first, it's pilot programs, small-scale implementations, limited corridors. Then it expands. More partners join, more volume flows through the system, and before you know it, what once seemed experimental becomes standard. But there's another layer to this that many people overlook, and that's regulatory clarity. Financial institutions don't move unless they have a clear understanding of the rules. Over the past few years, we've seen increasing progress in this area, with regulators beginning to define how digital assets can be used within the financial system. This clarity is crucial because it gives institutions the confidence to explore and implement solutions like XRP. At the same time, competition is heating up. Other blockchain-based solutions, stablecoins, and even central bank digital currencies are all vying for a place in the future of payments. So XRP isn't operating in a vacuum. It's part of a larger race to redefine how money moves globally. But here's the key difference. XRP is already positioned within the financial conversation. It's not starting from zero. It has years of development, partnerships, and real-world testing behind it, and that gives it a unique advantage as institutions look for solutions they can trust and scale. So when we connect all the dots, the inefficiencies of current credit card systems, the demand for instant settlement, the exploration of blockchain by major players, and the unique capabilities of XRP, a picture begins to form. A picture where XRP isn't just part of the future, but potentially a core component of it. Now let's shift the focus to something every XRP holder is really thinking about. What does all of this actually mean for price, demand, and the future value of XRP? Because understanding the technology is powerful, but understanding how that technology translates into market movement is where things get truly interesting. Here's the reality. Price in any market is driven by one simple principle: supply and demand. But in the world of digital assets, especially something like XRP, demand doesn't just come from retail investors buying and holding. The real game changer is utility-driven demand, when institutions actually need the asset to perform a function within a system. And this is where the credit card narrative starts to become extremely important. If XRP begins to play a role in the settlement layer of global payment systems, especially something as massive as credit card networks, then we're no longer talking about speculative demand. We're talking about functional demand. Demand that exists because the system literally requires XRP to operate efficiently. Think about it this way. Every time a transaction flows through a system that uses XRP as a bridge asset, XRP is being utilized, bought, moved, and sold within seconds. Now imagine that happening not on a small scale, but across millions, potentially billions of transactions. The volume alone could create a constant stream of activity flowing through XRP markets. Now, some people might say, but if XRP is only held for a few seconds during a transaction, does that really impact price? And that's a fair question. The answer lies in scale and liquidity. Even if each transaction only uses XRP briefly, the total volume of transactions can create sustained demand for liquidity pools. Institutions need access to XRP at all times to ensure smooth operations. That means maintaining liquidity, building infrastructure, and continuously interacting with the asset. And here's where things get even more interesting. As demand for XRP liquidity increases, market makers and institutions may begin to hold larger reserves to facilitate these transactions efficiently. This introduces a different kind of holding behavior, not driven by speculation, but by necessity, and that kind of demand tends to be far more stable and impactful over time. Now layer on top of that the psychological aspect of the market. As narratives begin to shift from XRP is just another crypto to XRP is becoming part of global payment infrastructure, investor perception changes, and in markets, perception can be just as powerful as reality. When confidence grows, capital follows. We've seen this pattern before in other sectors. The moment a technology moves from theory to real-world application, the market begins to reprice its value, not based on what it is today, but based on what it could become. And if XRP starts to be viewed as a critical component in the evolution of payment systems, especially those tied to credit card networks, that revaluation could be significant. But let's stay grounded for a moment, because while the upside potential is compelling, it's not without challenges. Adoption at this level doesn't happen overnight. Financial institutions move slowly, carefully, and often behind closed doors. What looks like nothing happening on the surface could actually be years of development, testing, and negotiation taking place in the background. There's also the question of competition. Other digital assets, stablecoins, and even private blockchain solutions are all competing for the same space. Some institutions may prefer solutions that give them more control, while others might lean toward decentralized options. The outcome isn't guaranteed, and that uncertainty is part of the equation. However, uncertainty also creates opportunity, because markets tend to price in doubt, and when clarity eventually arrives, the adjustment can be rapid. This is why timing becomes such a critical factor. Being too early can feel frustrating, but being too late can mean missing the majority of the move. Now consider this. If even a fraction of the global credit card transaction volume begins to interact with XRP, the implications could extend far beyond just price. It could influence liquidity across exchanges, impact volatility, and even change how XRP is perceived by regulators and institutions alike. It shifts XRP from being an optional asset to potentially becoming part of essential financial infrastructure. And once something becomes infrastructure, it's no longer easily replaced. It becomes embedded, relied upon, and continuously developed. That's the kind of positioning that can sustain long-term value, not just short-term hype. So the real question isn't just, will XRP go up? The deeper question is XRP positioning itself to be needed? Because in the long run, assets that are needed tend to outperform those that are simply desired. Now let's talk about the timeline, because this is where things start to separate hype from reality and patience from impatience. One of the biggest mistakes people make in this space is assuming that once a powerful narrative appears, the results should happen immediately. But when you're dealing with global financial infrastructure, especially something as massive as credit card systems, change doesn't happen overnight. It happens in phases, quietly, strategically, and often behind closed doors. Right now, what we are likely witnessing is not the final stage of adoption, but the early to middle phase of transformation. This is the stage where institutions are testing technologies, running pilot programs, forming partnerships, and evaluating risk. These are not things that make flashy headlines every day, but they are the foundation for everything that comes next. And in many cases, by the time the public becomes fully aware, the groundwork has already been laid. Think about how the internet evolved. In its early days, very few people understood its true potential. Companies were experimenting, building infrastructure, and solving problems in the background. Then, almost suddenly, it reached a tipping point and adoption exploded. The same pattern can apply here. The shift toward blockchain-based settlement systems, including solutions that involve XRP, is not a single event. It's a process that builds momentum over time. Now here's the key question. How do you recognize that momentum before it becomes obvious to everyone else? The answer lies in signals, not hype, not speculation, but real indicators of progress. These signals can come in many forms: increased partnerships between financial institutions and blockchain companies, announcements of cross-border payment corridors expanding, regulatory frameworks becoming clearer, and perhaps most importantly, subtle changes in how payment networks talk about their future infrastructure. When major players start using language like real-time settlement, on-demand liquidity, and blockchain integration, it's not random. It reflects internal shifts in strategy. And while they may not mention XRP directly in every case, the alignment of these ideas with what XRP offers becomes harder to ignore over time. Another important factor is regulatory clarity. Institutions don't fully commit capital and infrastructure until they understand the rules of the game. Over the past few years, we've seen gradual progress in defining how digital assets can operate within financial systems. Each step toward clarity reduces uncertainty, and as uncertainty decreases, confidence increases. And when confidence increases, adoption tends to follow. But here's where patience becomes critical. Markets don't always reward patience in the short term. There can be long periods where price appears stagnant, where narratives lose momentum, and where doubt starts to creep in. This is often the phase where weaker hands exit and stronger hands quietly accumulate. It's not exciting, but it's part of the cycle. At the same time, development doesn't stop during these quiet periods. In fact, some of the most important progress happens when no one is paying attention. Teams continue building, institutions continue testing, and infrastructure continues evolving. And then, when the right combination of readiness, demand, and clarity is reached, things can accelerate very quickly. Now imagine a scenario where a major credit card network announces deeper integration with blockchain-based settlement systems, not just testing, but actual implementation at scale. That kind of announcement wouldn't just be another headline. It would be a signal that the transition has moved from theory to reality, and markets tend to react very strongly to that kind of shift. But even before that moment arrives, there may be smaller signals: incremental upgrades, expanded partnerships, increased transaction volumes on blockchain networks, and growing institutional interest. These are the breadcrumbs that point toward a larger transformation unfolding. Timing, however, is never perfect. No one can predict the exact moment when adoption reaches critical mass, but what you can do is understand the direction of travel. And right now, that direction is clearly pointing toward faster, more efficient, and more integrated financial systems. So when you hear that credit cards just change the XRP game forever, it's not about a single announcement or a sudden switch. It's about a shift in trajectory, a movement toward a future where traditional payment systems and blockchain technology begin to merge. And as that merge continues, the role of assets like XRP becomes more relevant, not less. The question is not whether change is coming. It's how quickly it unfolds and who is positioned to benefit when it does. As we bring everything together, it's important to step back and see the full picture. Not just the excitement, not just the possibilities, but the reality of where things stand today and where they could be heading. Because when you hear a statement like credit cards just changed the XRP game forever, it's easy to get caught up in the hype. But real opportunity comes from understanding both the potential and the limitations. What we've explored throughout this video is a fundamental shift in how financial systems are evolving. Credit card networks, banks, and payment providers are all under pressure to become faster, more efficient, and more cost-effective. The current system, while functional, is outdated in many ways. Settlement delays, high fees, and complex intermediaries are no longer acceptable in a world that demands instant everything. And that's exactly why blockchain-based solutions, including XRP, are being taken more seriously than ever before. But here's the truth that many people don't want to hear. Adoption at this level is not guaranteed. Just because XRP fits the problem doesn't mean it will be the final solution chosen by every institution. There are multiple players in this space, each offering different approaches. Stablecoins, private blockchains, central bank digital currencies, they are all competing for a role in the future of payments. And large institutions will make decisions based on control, compliance, scalability, and risk, not just speed or cost. At the same time, it would be a mistake to ignore how well XRP aligns with the direction the financial world is moving in. Real-time settlement, on-demand liquidity, cross-border efficiency, these are not just buzzwords anymore. They are becoming requirements. And XRP has been built around these exact use cases from the very beginning. That positioning matters, especially as the industry continues to evolve. Now let's talk about mindset, because this is where most people either win or lose in markets like this. It's easy to be optimistic when prices are rising and narratives are strong, but the real challenge is maintaining clarity during uncertainty. There will be moments where nothing seems to happen, where progress feels slow, and where doubt starts to take over. That's normal. In fact, it's part of every major transformation. The key is to separate noise from signal. Not every headline matters. Not every prediction is accurate. But consistent trends, institutional interest, technological development, regulatory progress, those are the signals that carry weight over time. And if those signals continue to align with what XRP offers, the long-term outlook becomes more compelling. At the same time, risk management is essential. No investment, no asset, no opportunity is without risk. Markets can be unpredictable. Narratives can change, and outcomes are never certain. That's why it's important to approach this space with a balanced perspective, understanding the upside but also respecting the downside. Because here's the reality. The biggest opportunities often come with the highest levels of uncertainty, and not everyone is comfortable with that. Some people wait for complete clarity, but by the time clarity arrives, a large portion of the move may already be over. Others act too early, driven purely by hype without understanding the fundamentals. Finding the balance between those two extremes is where real strategy begins. So as you think about XRP and its potential role in the future of credit card systems and global payments, ask yourself this: are you reacting to headlines, or are you understanding the underlying shift? Are you chasing short-term price movements, or are you positioning yourself based on long-term trends? Because if the integration of blockchain technology into traditional payment systems continues, and if XRP secures even a small role within that ecosystem, the impact could be far-reaching, not just for price, but for how value moves across the world. And that brings us to an important final note. This video is not financial advice. Everything discussed here is for informational and educational purposes only. The cryptocurrency market is highly volatile, and you should always do your own research before making any investment decisions. Never invest more than you can afford to lose, and always consider your own financial situation and risk tolerance. With that said, if you found value in this breakdown, make sure you stay connected, because the landscape is changing fast, and the biggest opportunities often appear when you least expect them. This is XRP on Moon, and we'll be watching every move, every signal, and every shift as this story continues to unfold.